The U.S. rental market continued its gradual cooling in October, marking the 27th straight month of year-over-year declines. The median asking rent across the 50 largest metro areas slipped to $1,696, falling both from last month and from a year earlier. Even with this consistent softening, the overall pullback from pandemic-era highs remains modest, with rents still nearly 17% above 2019 levels. Studio, one-bedroom, and two-bedroom units all posted annual declines, but each unit type remains significantly more expensive than before the pandemic, showing how the long-term affordability challenge persists even while short-term relief continues. Despite these cooling trends, renters are increasingly active again, encouraged by gradually improving affordability. Realtor.com's cross-market search data shows that while national rents have softened, the forces shaping demand vary dramatically across metros. Markets dominated by locals, such as New York, Chicago, and Los Angeles, remain more insulated and stable. New York, where nearly three-quarters of rental traffic comes from local residents, continues to see rent growth because strong rent regulations, limited supply, and high home prices keep people renting longer. Los Angeles follows a similar pattern for many of the same reasons. On the other hand, cities like Raleigh, Richmond, Nashville, Hartford, and Providence have seen a powerful swing toward out-of-market renters. These metros attract newcomers with lower costs of living, expanding job markets, and appeal to remote workers and young professionals. Over the last 6 years, 20 major metros shifted from being local-driven to newcomer-driven, a reflection of the massive reshuffling brought on by remote work, affordability pressures, and shifting lifestyle preferences, while no city has moved in the opposite direction. Even though rents remain well above pre-pandemic levels, the recent steady declines show a market adjusting to increased supply and slower demand. Seasonal cooling is part of the trend, but broader economic conditions, including constrained home buying affordability, are helping stabilize rent prices. The rental market is now shaped by a mix of easing rent growth, shifting migration patterns, and a growing divide between metros supported by loyal local renters and those transformed by waves of newcomers. This dynamic will continue to shape the rental landscape heading into 2026.